Hello, I am Kurt from the Trading Options for CashFlow channel, and in this video I will explain and demonstrate how to use the customized spreadsheet I've created to track the options wheel strategy. A good and correct tracker is paramount in options trading, because it allows us to become more precise, more correct and quicker in our decision making when applying the wheel strategy. The spreadsheet provides at all time an update and overview of my realized net profits, cash balance, my realized stock profit, options profit, my unallocated cash, and many more parameters. I want to keep the video focused to the use of the spreadsheet itself. I will not go into details about the in and the outs of the wheel strategy itself, nor about the basics for option trading. This video is about using the spreadsheet. To learn more about option trading strategies, or other related topics, you can always look at our website tradingoptionscashflow.com. I do have a written and focused article for you to read on our website about the options wheel strategy. And of course, you can find more info about option trading there too. I will put the links in the description below. Now back to the spreadsheet. When you open the spreadsheet, you will find 3 tab sheets. The first tab is the real logbook template. The second tab is a filled example, and the third one contains a summary of instructions and explanations about the spreadsheet itself. The middle part of the spreadsheet contains all the rows where every step and every action of the option wheel strategy is recorded. As you can see here, the template has plenty of rows pre-made with columns of all the relevant data for tracking the options wheel strategy. Here down below, we also see a copy row which can be used to add more rows to the spreadsheet whenever that's required. This copy row contains all the calculated fields and conditional formatting and serves as a basis to add new rows. This is simply done by inserting the rows and copy the copy row onto the inserted rows. Next, on top of the sheet, we see our dashboard. Our dashboard calculates the results and tracks all relevant parameters. When we add records to the spreadsheet, you will notice that the fields will have different colors, and it's important to remember that you should not alter the fields with a blue color, because they may contain calculated fields. The fields to enter have a white background or will become red to indicate that they are required to receive data. You will understand this principle when I'm demonstrating this with an example. Okay, now we know the different parts of the spreadsheet. Let me show you how I use the spreadsheet with a practical stock example. Imagine I've decided to apply the wheel strategy for the Apple stock. Again, let me remind you that you should read and get informed about all considerations of applying the wheel strategy before executing. I'm just demonstrating here how to use the spreadsheet. The first thing I need to do is to make a copy of the wheel logbook template and rename the tab. I will rename it with the ticker symbol of the stock itself, being Apple, AAPL. So let's move this to the right by dragging it. Okay, now we are ready to start. You need to add at the top left of the sheet also the ticker symbol. I enter AAPL, Apple, and I hit enter. The current share price gets automatically updated. Okay, now let's enter some steps of the wheel strategy. The first step is to add or allocate cash to the strategy. We do that by clicking on the action field on the top row and we select deposit cash. Obviously, we are not really depositing cash, but we are actually reserving a specific amount of our trading account for this specific wheel trade. After selecting deposit cash, you notice a couple of fields have become red, indicating that these fields require data to be filled in. So let's do that. Let's imagine that I've started the strategy 1 year ago, let's say on November 1st, 2021. I enter the dates. I keep track of 2 separate dates, the date I lock the entry and the initial opening date, because these dates will differ whenever I roll a trade. You will see that later. I enter the transaction price and I deposited an amount of $20,000 for this wheel strategy. So I enter 20,000. You will notice that the dashboard data will update automatically every time data is entered. The transaction added credit of 20,000 and now I have a cash balance of 20,000. In the transaction summary, you can also see the total deposits of 20,000 appearing. And for the moment, I still have 20,000 unallocated cash, meaning the amount of cash still available to allocate to the wheel strategy. Okay, so now our first step in the wheel strategy is to sell an out-of-the-money cash secured put. I will not go into detail about the correct selection of the expiration date and the strike prices and so on. These are obviously important decisions, but they are not, I repeat, not the focus of this video. In this example, I will make fictitious transactions for an educational purpose to demonstrate how to fill in the spreadsheet when applying the options wheel strategy. So let's imagine with the share price of Apple at $150 that I will sell a cash secured put on the same day of depositing cash in the action field. So I select Sell to Open and CSP, the abbreviation of the cash secured put. So I'm opening a new short position. You see immediately which fields require data, so let's fill them in. So November 1st, 2021, and the share price at the moment of the transaction is 150. The spreadsheet will automatically indicate that this transaction will create a credit. Next, the options data. I sell a put with expiration date 15 December 2021 with a strike price of 120, being $30 below the share price, so well out of the money. One contract of 100 shares, and I receive a premium of $3.50 per share. You will notice that the total credit received is of course $3.50 times 100 shares, which makes in total $350. Calculated in the field opening amount. The fee is the total amount your broker will charge to you to make the transaction. For this example, I will use a fee of $2 for every option transaction and, for example, $4.95 for every share transaction. I know this will vary from broker to broker, so it's up to you to decide or to use the correct fees accordingly. So I will add now $2 fee. Next, I need to add and follow the status of the position in the part of the current parameters. Here I fill in the important field being the status of the transaction. In this drop-down, I can select Open, Close, Assigned or Rolled. Every new action of selling a cash secured put will start with an open position. So let's select Open right now. The spreadsheet makes a couple of indications. I do have to point out that in this example, while I'm adding data, the field DTE in the part current parameters, and DTE is the abbreviation for days to expiration, calculates automatically the number of days left in the contract, or when the expire date lies in the past, it will mention expired in the field. Of course, for this demo video, by filling in an example with dates in the past, I cannot avoid to see expired in this field. You will also notice the red indications telling that the expiration date is in the past. You will also see the indication that as long as the position is open, current price to close is a required data field. This price is actually the premium you will have to pay at this moment to close the position, and in other words, to buy back the put option contract you have sold before. Obviously, depending on the price of that current premium, you will have an unrealized net profit or loss. Imagine that on the same day, price to close stays at $3.50, so I can fill it in. The unrealized net profit will be minus $4, being the fees of opening and closing the transactions. And if the premium rises to, for example, $4 for the contract, then the unrealized net profit is going to be minus $54. And if, for example, the premium goes up to $2.15, the unrealized net profit will be $131. It is, of course, an unrealized net profit because the position is not yet closed in reality. The profit or a loss will become real or realized after closing the short put position. Notice that in the field cash allocated, The sum of 100 shares times the strike price is indicated as being reserved for meeting our obligation as a put seller. Having the possibility for being assigned or obligated to buy 100 shares at the strike price of $120, in total $12,000. Now imagine that we, in the philosophy of the wheel strategy, we wait till expiration, and in that case the share price stays above 120. So let's imagine the share price is 135. Then the put option will expire worthless on 15 December 2021 and will be closed automatically for $0 without any fees. So let's fill that in. We select closed in the status position, which turns red, indicating we need to complete the closing parameters. The closing parameters are the closing date, which is the expiration date, closing transaction type. Now we buy to close the transaction. The quantity is one contract, and the closing price and fee in this case are both $0. With the option expiring worthless and the closing fee of $0, this brings my cash balance at $20,348. The spreadsheet will automatically adjust the number of days held to 44 and actualizes the trade result fields in the dashboard, calculating the realized net profits, the realized daily profit, the realized return on capital, and the annual non-compounding return on capital. In this case, with the capital being the total of the deposits, I do need to indicate here that withdrawals during the wheel process are not considered for adapting the calculated results. Now, if you close the short put position before expiration, which is quite possible, you can do the same. For example, closing December 10th, 2021 for a premium of 75 cents and a $2 fee. You will notice that the amount of 77 is debited from the cash balance from buying back the put option and thus closing the short position. This brings the cash balance at $20,271. Okay, now in the option wheel philosophy, we can rinse and repeat this step of selling a cash support put as long as we don't get assigned. So let's imagine that after closing the first position on December 10th, 2021, the share price is a bit down to $130. And I will sell a new cash secured put with the following data. So action, sell to open a cash secured put. The date is December 10th, 2021. The share price at the transaction is $130. Expiration date January 20th, 2022. The strike price of 115. Quantity of the contracts 1. Premium per contract $4.25 and fees $2. This results in a credit of $423 and a cash allocated of $11,500. I will keep this position to further illustrate the logic and the steps of the wheel strategy. Let's imagine that the share price of Apple goes further down and was trading in the marketplace at expiration date of the 20th of January at $110. Now, with my short put option being $5 in the money, meaning the intrinsic value of the option is $5, the buyer of the put option will surely exercise the contract because he can sell his shares to me $5 per share more, being 115, than he can sell them in the open market, which is only $110. So I will surely get assigned to buy the shares. So when assigned to the shares, how to complete now the spreadsheet? First of all, I change the status to assigned. The color red, indicating I need to complete the closing parameters. I will add the date that I'm assigned and that I have to buy the shares in the date of the closing parameters. I will add here the expiration date, the 20th of January 2021. The transaction type is ASS from assigned, the closing quantity is 1, and the closing price for the option is 0, and the fees are also 0. Now it is important to notice that this row, where the put option is assigned, needs to be combined with a buy share action. So we add on the next line the action buy shares, and we completed the data of a buy action. So action buy shares at 20 January 2022, the transaction will be a debit. Quantity is 100 shares. The transaction price, being the strike price, is $115, and the fees of a share transaction is $4.95. And I need to indicate the status to open, meaning that the shares are bought and still in my possession. Now let's take a look at the dashboard. It's updated with the option executed and assigned in shares. The allocated cash has disappeared, the cash balance is adapted, and the parameters in the share summary have changed also accordingly. It now says in the current share quantity that I have 100 shares, and that based on the actual share price, I have an unrealized stock profit, the amount indicated here in green. So now the third step in the options wheel strategy is selling a covered call against the shares that we own. Let's imagine I sell a covered call on the same day that I had to buy the shares. So let's enter that in the spreadsheet. So action sell to open, covered call, the date is 20th of January 22, at a share price of $110, the expiration date 15th of March 22 for the option, and the strike price of the option is $130. Quantity of the contracts, just one. The premium contract that I receive is, let's say, $2.65, fees $2, and I set the status to open. And the current price to close, as I said, I will always start with the same premium of opening, so also here $2.65. I have now two positions open, 100 shares and a short covered call. Now when time goes by, the share price gets updated in the spreadsheet automatically. It's up to you to update the price of the premium as it evolves and see the impact of these updates in the dashboard parameters. For example, we are the 1st of February and the share price is 118. And the premium for the covered call is down to 195. You can see the unrealized stock profit and the unrealized options profit. Now imagine that Apple pays a dividend while you are holding shares. Let's say on 15 February 22, Apple pays a dividend of $1.25 per share. Let's enter that into our spreadsheet. So the action here is to select Receive Dividend. Date is 15th of February, and we enter the total amount of the dividend received being 100 times $1.25, which equals $125. So we enter the dividends, which will increase the cash balance and the realized net profit, as you can see in the dashboard. Let's go back to our wheel strategy now. So we can continue selling covered calls each time a covered call expires worthless. And this way, we will continue receiving premium, allowing us to lower our overall cost basis. The cost basis, being a critical parameter of the decision making, is calculated automatically. You can find two cost basis calculations here. The cost basis when closing at current prices of the open options, or closing when the options expires worthless. When we continue selling covered calls, this means we add new lines with covered calls for every new position. Now let's imagine for this spreadsheet demo that, for example, the price of Apple goes above the strike price of the covered call. Imagine that the share price at the expiration rises, for example, to $138. We know that we have an open contract, a covered call with a strike price of $130. So let's adapt the spreadsheet by imagining that we get assigned to sell the shares for the covered call contract. We will adapt the spreadsheet as follows. We have to close the covered call by setting the position status to assigned. The date closed 15 March 2022. The quantity is 1. Closing price and fee are both 0. This closes the option and we keep the premium. But we also have to indicate that we are selling the shares. So we go to the line where we bought the shares, we select position, closed, and we complete the closing parameters. In this case, March 15th, the transaction type sell to close, the quantity is 100, the transaction price is a strike price of the contract, $130, and the fees $4.95. I have no open positions anymore, and the parameters of the dashboard are adjusted to this situation. So now I can restart the wheel if I want to with selling a new cash secured put again, but I won't do this right now for this video, but you can see the results of one wheel in the dashboard. The net profit, the number of days, the return on capital, and so on. So we are at the end of this demonstration video. The links to the spreadsheet, the article about the spreadsheet, are all mentioned in the comments below. I will also add the links to my Twitter, and you are also invited to join our Discord community to talk and share about our options trading learning process. I hope this spreadsheet demo was all clear for you, so if this helped, give me a thumbs up, and if you have any suggestions, let me know in the comments. That's all for now. Talk to you soon. Bye.